US indices prices experienced a sharp sell-off last week as tensions in the Middle East continued to escalate. Risk sentiment toward the indices deteriorated while commodities outperformed, with sharp spikes in the energy commodities and the safe haven instruments. Markets continue to remain volatile as tensions in the Middle East continue to remain the center of global attention. Prices of commodities continue to exhibit strong volatility despite signs of stabilization of the conflict. While the Israeli ground offensive has seen delays, Israeli officials continue to indicate that there will indeed be a ground operation. This could be a strong escalation and could continue to be a catalyst for volatility. Indices prices could also continue to experience volatility as well, as geopolitical instability remains the key focus. Nvidia prices have rebounded recently and has been a strong performer in the technology sector. Nvidia continues to remain dominant in the AI chip space and, despite recent US restrictions of chip exports, continues to outperform since the beginning of the year and is up around 200% since January. The company has recently announced that it will be producing ARM-based PC chips, venturing into the CPU space, and could challenge heavyweights like Intel. According to reports, the company may start producing processor chips for Microsoft Windows operating systems, which could ultimately improve earnings for the company. Palantir continues to exhibit signs of growth after recently attaining a $250 million military contract from the US government. Palantir continues to grow its net income and client base, while also remaining an integral part of the US security architecture. Furthermore, according to reports, Palantir is the front-runner for a £480 million contract with the NHS of the UK. The stock prices continue to perform well and still trades around 161% higher since the beginning of the year. Crude oil prices have declined recently as the delay of Israel's ground offensive stabilized markets somewhat. However, the risk of escalation continues to remain strong, and the Israeli government has reinforced their position that a ground offensive is imminent and that the escalation is highly likely. Should the war spill over into other Arab states, oil supply routes and oil production capabilities could be disrupted. For example, if the war escalates to Iran, the Hormuz Strait may be closed or movement could be heavily restricted. Around 15.5 million barrels of oil per day move through the strait, around 10% of current global oil demand. Should this amount of supply be disrupted, oil prices could exhibit sharp volatility. Gold prices retreated, although only marginally. Gold prices continue to remain above $1,950, trading around $130 higher than prior to the conflict in the Middle East. With geopolitical tensions continuing to remain high, there could be wider economic implications as key trade routes around the Middle East could be impacted. As a result, gold continues to experience strong demand, and prices continue to remain volatile. Natural gas prices have increased over 8% since the beginning of the conflict of the Middle East. Qatar, the largest LNG exporter in the world, remains in a region at risk of war. The country has been widely recognized as a sympathizer of the organization fighting in Gaza. Should there be increased escalation, Qatar could potentially be impacted, and the country may impose its own restrictions of LNG exports. The effect of such a move could severely disrupt gas markets and could create volatility. The EUR/USD experienced strong volatility as the currency pair saw a sharp sell-off amidst the Middle Eastern escalations. It was followed by a relief rally and once again saw a decline on stronger than expected US economic data. Investors will be looking forward to the ECB rate decision set for this week, with board members previously stating the possibility of further rate hikes for the Eurozone.